Hey, what's up everyone? Welcome back to the VoskCoin YouTube channel. Today we're going to be looking at one of those hidden gems in cryptocurrency, one of those crypto moonshots, or maybe a low cap coin. But seriously, we're going to be looking at a new DeFi, decentralized finance token on the Ethereum blockchain, but the rumor is always multi-chain these days. But one of the cool things is that these guys do, it revolves around stablecoins and arbitrage trading, and the recent profit percentages is well over 1,000%. Stabilized Finance has put up 100 STBZ, their tokens to give away, which is right now worth about $1,000. One lucky winner is going to be the recipient of that. All you've got to do is drop your Ethereum address in the comments below, as well as something interesting or unique that you like about Stabilized Finance. On top of that, they say bonus entries if you share the video with your friends, family, and any other place on the internet. Also, they have an Ethereum cashback gas token. And as someone who is blown up, obliterated literally thousands of dollars worth of Ethereum on transaction fees, gas fees for moving all this stuff around. So we're going to be running through this, reviewing this. I'm going to show you how to use their platform and everything in between in today's sponsored video. So let's run 10 seconds. Tails, the best Shiba Inu in the world ever and the #1 Dogecoin in the world. Here's a quick message from our month's video sponsor, Compass, who are aiming to become the best marketplace for the purchase of Bitcoin mining ASICs and the best place to find cheap power prices at verified mining co-location facilities around the world. Mine with Compass with our link in the video description below. Earn STBZ for keeping stablecoins on their pegs, because stablecoins are supposed to be pegged to $1 or whatever their peg is if they're like a multi-collateral stablecoin, right? And basically, if you don't know, a stablecoin like USDC and USDT, Tether, which is supposed to be tethered to the US dollar, the whole naming there if you didn't know that, basically, 1 USDC, 1 USDT is supposed to equal 1 USD, 1 US dollar. And Stabilized Finance and their whole platform revolves around this. I know there's been a lot of concern about exit scams and rug pulls and things like that. This has been reviewed by DeFi Yield and audited by Barama. And so I went through their audit here. They have some concerns, but it's not about like, oh, this is a scam. It's like, oh, you should do this differently. Or, oh, this is not the best practice, basically from a coding point of view. But please understand, this isn't financial advice. I'm not a professional coder, developer, or anything like that. I just, learn as much as I can and do the best I can with all that kind of stuff. Never invest more than you can afford to lose. So you can check out both of these. They're linked, right here on their homepage. They've got nothing to hide in that regard. Then this is an anonymous project, just to get those full disclaimers out of the way. Also, VoskCoin MetaMask. If you don't know what MetaMask is, I'm telling you, you gotta learn whether you want to or not. We've got a full video guide on this browser-based Ethereum wallet that acts as just your gateway to all this crazy DeFi dApp madness. So we come over here, we connect MetaMask, and from here, you can see the current stablecoins associated. We can look at the pools associated or provided on their platform, and you can see the interest rates. The core business of Stabilized Finance is performing arbitrage between proxy tokens and stablecoins like USDC, DAI, or WBTC, which again is wrapped Bitcoin, as well as REN pairing. The fact that these protocols perform arbitrage between all of these pairs is really their unique selling factor. No other protocol that I know of does this, or at least not yet. A proxy token is a wrapped token, and a wrapped token is basically just another token traded on top of an alternative blockchain, which for example is like WBTC wrapped Bitcoin. WBTC is simply a wrapped or proxy version, which is a token pegged to Bitcoin and traded on the Ethereum blockchain. Just like WETH, WETH, is wrapped Ethereum, It's just Ethereum traded on top of the Ethereum blockchain. Basically, they are performing arbitrage between peg tokens and any of the underlying asset potential pairings. Basically, this is giving them more combinations, which in turn results in more arbitrage opportunities. And finally, that hopes to help them realize more profits. When you click on GOV or governance, that will take you to their snapshot page. We've talked about snapshot numerous times recently, but voting on proposals, being involved in the governance with different DeFi, cryptocurrencies, tokens, all that kind of stuff will incredibly increase your chances to be eligible for airdrops from, say, potentially this project as well as many others. So if you have tokens associated with any of these, you really should head over to Snapshot, and then from there you can vote and just kind of be involved and be eligible for potentially free and lucrative coin drops. One of the most active projects on Snapshot is Badger DAO, and they're excited to be collaborating with Stabilized Pro to build one of the first automated stability vaults for a rebasing asset, their DIG token. So if it's above the peg, sell percent to build wrapped BTC, which is WBTC. It's basically Bitcoin traded on top of the Ethereum blockchain. And if it's below the peg, use reserve to buy DIG, all without affecting your ability to use BDIG, which is staked DIG across all chains. And just to, illustrate that, Stabilized Pro is Stabilized Protocol, which is stabilized.finance. So let's talk about their STOL token real quick here. I think this is pretty interesting. I have this pulled up, and basically Stabinol, probably it's I think it's based off ethanol, right? Which is like the worst gas, but it makes sense. I get it. Better than like STAS for like stabilized gas or Stabass. I see why you went with Stabinol. So it's now available for use, and if you were an early user on their platform, you would have gotten an airdrop of this for free. But like, what is it, right? They claim it to be a new cashback token developed by the Stabilized team in their previous article. Obviously, DeFi interest and use is through the roof, and that's why they're bringing this. So it's unreasonable to expect someone to deposit $1,000 in DeFi to earn 10% interest while paying a $200 gas fee. Absolutely true. I've literally done that, and it's quite depressing. It's quite depressing. As of the time of recording this video, I have obliterated 2.4 Ethereum on gas, and right now at current prices that is over $4,220. And while I have had a good time and made money in DeFi on the Ethereum blockchain, I mean, how depressing is that? This should be $220, not $4,220. So something has to change from a blockchain scalability point of view with Ethereum. But again, that's another day, another issue, another video. But there are like partial solutions in the short term, and a gas token right now could be one of the most lucrative things freaking ever. We've talked a little bit about the chai or chi token at a 1 inch, and basically that token kind of acts as like you can try to buy it when gas is cheap and then use it when gas is high. It's as close as you can get to trying to like buy the dip and then selling the top when it comes to gas, but it's not as lucrative as it may sound. But basically, what makes Stabinol unique, right? So they claim it's unlike other cashback ETH gas tokens in existence because they're not only reimburse your gas costs, but all ETH spends up to a certain limit. So if you've ever had a cashback credit card that gives cash back on all expenses, that's basically what they're aiming to create here. No initial token sale. Users can simply go claim on the contract to redeem their cash back. Users must stake for 24 hours a certain amount of stabilized token, and then afterwards, every 24 hours, the user can claim a cashback and receive back a percentage of the value in Stabinol tokens, up to a certain monetary maximum for ETH spent since the last claim. Basically, it's essentially this. We'll run through this quick example just so you fully understand if you're interested, right? So Current cashback percent is 25% of the holdings, and the monetary maximum is 200. So a user spends $150 worth of ETH on one day, paying gas fees and buying tokens, and the user's holding of STBZ-ETH token is worth $10,000. When the user claims, he will receive $150 worth of STBZ-ETH tokens to reimburse the entire daily ETH spend here. So if the user spends $1,000 worth of ETH the next day, he'll only receive $200 worth of STBZ-ETH tokens, because that's the maximum amount claimable at that time. That's and that is referencing the monetary maximum. So there does have to be some kind of limits in place there. Otherwise, it just, it wouldn't work. There's a lot of speculation around all this stuff, but there is a use case. There is a way, to participate, usage and participation, and just something to help offset these massively painful gas fees. And things like this could also help users kind of maybe slow down a little bit. And like, okay, well, I'm going to spend once a day, and then once my claim period comes back up, I'll do another transaction then, and another transaction, say 24 hours after that, and so forth. And that could also potentially help people kind of spread out their usage, right? And that would help distribute the transactions on the blockchain a little bit more evenly instead of such a rush, which creates the heavy congestion and the huge spikes in transaction gas fees. With a market cap still under $7 million, $1,000 here will get you 73 STBZs. No DBZ, my friends. I'm sorry, Goku. And so, but like, why? Like, what's the point? What's the point? We come back to the pools, which is just the main piece of the project, simply put, right? And right now they have $11 million TVL locked up in here, which I find interesting. They have that much value locked in these pools, and yet their market cap is under that TVL. So what do they do, right? I've talked about it, but like, what does that mean, right? So the core business of Stabilize is a proxy token, and basically arbitrage by a decentralized network of executors. This is what makes them unique. No other protocol does this. It's more efficient compared to common arbitrage trading, since you leverage the price between proxy tokens. Not only the price differences between exchanges of a single proxy token, the ZS USD pool now additionally stacks proxy token arbing on top of Aave lending returns. I mean, this is starting to be like some DeFi square deeps, like, we in there deep in the trading realm. So by using that wrapper, depositing in the ZS USD pool, you get Aave interest plus a proxy token ARB profits plus STBZ incentives. And that's basically the pitch, right? That's what they do. Like, instead of just taking arbitrage trading profits, which, like, say you could do yourself manually or with an arbitrage trading bot. And again, if you don't know what arbitrage trading is, so say the one coin is being traded over here for $1 and the same coin is being traded on this exchange for $1.50, you would buy up the coin over here for $1 and go dump it over there for $1.50. But on top of that, earning interest via Aave's platform, which is a whole nother thing, and then their own implied and protocol self-generated incentives with the STBZ, their native platform token. If you want to utilize the STOL token and just their faucet here, there's a couple rules. You simply can go over to Stabilized.Finance, go to the STOL tab up here, navigate, and you can see the instructions. But basically, you need to stake the required amount of STBZ, stake Uniswap, STOL, LP, liquidity provider, liquidity pair. Then you have to wait 3 days to claim. Unstaking does not auto-claim. Earn up to 4% of STOL in LP holdings after 3 days. Earnings will accumulate up to 100% of STOL in LP holdings after 6 months left unclaimed. And basically, it's a whole thing, right? And what's going on here is it's an Ethereum gas token, but also a cashback token. Please keep in mind that Stablecoin contracts are experimental and they are not currently audited. You are proceeding at your own risk. So I'm going to go ahead and show you how to just like participate with the basics here. Okay, so we come over here, we click get STBZ/ETH LP. And LP is being a liquidity provider. We've got a full review on Uniswap, what it is, our thoughts on it, and I walk you through the basics of it as well as becoming a liquidity provider. So with this, I need some STBZ in order to complete this. I also have some tokens already, but most of those will be used for the giveaway, right? So 0.1 ETH right now would get me 13 tokens. So let's go ahead and running for 50 tokens, right? So I'll go ahead and grab 50 tokens, click swap. Price impact of 0.03%, which is nice. Not a big price impact, especially for a low cap coin like this. So I will go ahead and initiate that trade. And then I already have the tokens in my address, so I don't have to wait for that transaction to confirm. So I can come over here and I can put in 50 tokens. This is the associated ETH amount that needs to be input. I've got to get blown up for a $16 freaking gas fee. My gosh, but let me guess, EIP 1559 is gonna save you. I doubt it. Let me guess, Ethereum 2.0 coming soon in years. Okay, I'll just continue to sit here waiting. And when we click supply, we are providing liquidity, right? We're putting an amount of STBZ stabilized tokens in here, and then a matching amount of Ethereum. So currently 50 STBZ would require us to put in 0.37 Ethereum. If Ethereum skyrockets in price, you're going to suffer impermanent loss. Same with STBZ in that regard. Make sure you understand the potential risks as well as potential rewards before you jump into this stuff. I would definitely say like DeFi is intermediate level. It's not simple, but it's not hard. You can do it, but it will take a little bit of research and time. So the swap has been completed and the approve went through. Looks like those went through on the same block. So I will confirm this transaction, get blown up for yet another gas fee. Now I am basically adding that liquidity. And then once that completes, then goodbye, buddy. Why? Someone help me save me from these gas fees. They're not low right now, but they're not, too ridiculous compared to, what they normally are here. But NFTs, non-fungible tokens, are just continuing to drive this stuff up higher. Once that transaction goes through, it will say add 50 or in my case, whatever token amount you put in for, in this example, 50 STBZ and the associated ETH. So now you see the position down here as well. That's my liquidity provider position, 3.734 pool tokens. And from there, we'll refresh this and you can see that has been completed. So now we can go ahead and input our tokens. It's okay, just another $111 fee. So that brings us back to the question, if you want to participate with this stuff on the Ethereum blockchain, is you've got to have at least a minimum of $1,000 in order to participate and just probably find it rewarding. If you're trying to participate with $100, you can't. I mean, gas fees are too high. I showed you just when I was earlier in this video, 2.406, $4,220. 2.478, $4,330, just like that. Now the transaction has gone through, confirmed. You can see our balance of LP liquidity provider tokens, and you can see that we've already earned 0.0002 STBZ. So we're basically rich, man. And when I say that, I don't seriously mean it. We refresh again, now it's doubled. Our earnings have doubled. It's just exciting times, right? So obviously, guys, there's a lot going on when it comes to stabilized finance. I find it interesting. I'm just totally enthralled with decentralized finance. I'm absolutely depressed with Ethereum gas fees, and I want to see some solutions taking place. This is a good example, though, of the use case of their Ethereum cashback gas token, which I have not tested and used yet, but it's something I'm looking to explore. This is the initial review of their platform and how to get involved. And the biggest thing I'm looking for here is also that, like, if their STOL token, STOL token, takes off, by nature it's going to drag up their STBZ token, because that's what this all really revolves around. I'm not saying it will. This isn't financial advice and all disclaimer stuff, but when I see a market cap under $10 million that has a working platform that's doing cool stuff and is multi-token, I'm interested. I'm intrigued, right? You know, and I like the, you know, potential like moonshots, right? Even just a couple dollars could become something pretty interesting. Or maybe you'll get really into the project and see where it goes. I don't know. But I do know that you should subscribe to the VoskCoin YouTube channel, hit the thumbs up, leave a comment, and join that giveaway. And I'll see you on the next video.
Shine.